we can see the real-time price movement of Bitcoin, which is indeed experiencing a drastic drop, currently sitting at around 62,871.93. Looking at the deep red color on the chart, its decline over the past year has reached nearly 40%, specifically 39.88% on this chart, even dipping to a 24-hour low of around 61,112.66. For everyday folks, seeing numbers plunge like this can definitely trigger a mini heart attack. Let's break down what's actually happening and where Bitcoin might be headed next in plain, simple terms. Why did Bitcoin drop so hard? Think of it like a traditional market. The price of chili. Peppers can plummet if buyers suddenly vanish while the supply is overflowing. Bitcoin's current situation is pretty similar. Here are the main culprits. Big players and institutions are cashing out. The image highlights a news headline: BTC ETFs log outflow. This means big money institutional investors, the very ones that pumped Bitcoin to massive heights back in 2025, are now collectively pulling their money out. Outflows. Billions of dollars have left the crypto market in a short window. Money is shifting to AI trends. Many large investors currently view AI, artificial intelligence, tech stocks as sexier options that offer more predictable returns. As a result, they are reallocating capital out of Bitcoin and into AI. Global uncertainty, with global economic issues, geopolitical tensions, and central banks keeping interest rates high. People prefer to park their cash in safer, low-risk assets rather than dealing with crypto's extreme volatility. Where is it headed next? Looking at the current market setup, there are three likely scenarios Bitcoin might face next. 1. The bitter scenario, testing the $60,000 psychological level. At the top of image 10313427 JPG, there's an interesting header. Is 60K the floor or just a stop? If the heavy capital outflows continue over the next few days, Bitcoin's price is highly likely to test the crucial $60,000 mark. If this 60K fortress crumbles, brace yourself to see a further slide down toward 55,000 or even 50,000. 2. The boring scenario, sideways, moving in circles. There is a chance Bitcoin won't drop any further, but it won't instantly shoot back up either. The price might just bounce back and forth within the 60,000 to 65,000 range for the next few weeks or months. This is called a consolidation phase, where the market takes a breather and waits for the next big news catalyst to trigger a fresh move. 3. The sweet scenario, a rebound, bouncing back. The silver lining here is that on-chain data shows whales, long-term. Investors holding massive amounts of Bitcoin are staying calm and haven't joined the panic selling spree. If they decide that the $61,000, $62,000 range is a good discount, a sudden wave of buying pressure could emerge. Once fresh capital flows back in, Bitcoin could slowly climb back toward 68,000 and eventually reclaim the 70,000 level.